Good day, sir. I am Manilin V. Galliera. I am a business student, major in financial management. Today, I will discuss the final module 1. My topic is all about clearing and settlement system and treasury management. So, clearing and settlement system. In clearing and settlement systems, the banks of the payer and beneficiary exchange information regarding monetary transfers, the result of these exchange payments between the banks. So, is all the steps involved in the transferring funds ownership from one party to another, except the final step, which is settlement. Settlements involve aniaya finalization of a payment so that ang bago nga party takes possession of transferred funds. So, sabton jud ang mga information. Example ani is if a company want to purchase a futures contract for wheat from foreign parties, so they would need to contract a clearing house which will use the international clearing system to match the trade with another party. And then next, settlement types. Payments can be on a gross basis where each bank pays the total amount owed. Payments handled through a gross settlement system are more likely to have a requirement for immediate execution, where payment instructions are processed separately for each individual transaction. Payments can also be a net basis, where a large number of transactions are accumulated and offset against each other, with only the net differential being transferred between banks. Payments handled through a net settlement system usually wait until the end of the day, when all transactions between the banks are summarized and offset against each other by clearing institution. The clearing institution then sends the net transfers information to the settlement institution, which executes transfer for funds between banks. So, in settlement types, so it is a last bank to receive and report the settlement of a transaction between two entities. So, then customer where payments of transaction of the bank finally settle and clear for customer use. The payers of the transaction will be a customer of a different bank from the receiver, and so interbank settlement process must occur. Settlement types also provide merchant services. Next, transaction types. In transaction type, we have one type. It is a feed wire. Feed wire refers to a real-time gross settlement system of central bank money used by Federal Reserve feed banks to electronically settle final US dollar payments among member institutions. The system processes trillions of dollars daily and includes an overdraft system that covers participants with existing and approved accounts. So, FedWire means the funds transfer system owned by operated by the Federal Reserve Bank that is used primarily for the transmissions and settlement of wire transfer, governed by the FedWire regulation. So it is formally known as the Federal Reserve Wire Network. FedWire is a real-time gross settlement funds transfer system operated by the United States Federal Reserve Banks that enables financial institutions of electronically funds between its more than 9,289 participants as of March 19, 2009. Examples of transaction types: paying a supplier for services rendered or goods delivered, paying a seller with cash and note in order to obtain ownership of a property formerly owned by the seller. Then, naka-receive og payment gikan sa customer in exchange for goods or services delivered. So, the last, it is Feedwire system. Si Mr. Jones is a customer siya sa Pinstripe Banks in New York City. So, he instruct the bank to send $5,000 wire transfer to the bank to the account of his sister, Mrs. Smith, that Beachside Bank in Los Angeles. So, sa Pinstripe Bank enters a Feedwire message for his transaction, which goes to its Federal Reserve Bank. Pinstripe Bank's master account is debited and Beachside Bank's master is credited for $5,000. Beachside Bank receives an advice of credit message with the information necessary to post the transaction to Mrs. Smith's account. And that's all. Thank you.
Hi, good day to everyone. I am Danisa E. Gawahan. The topic that I am going to discuss is about the Automated Clearing House or ACH and the Treasury Management. And first is the Automated Clearing House or ACH. The Automated House Clearing or ACH network is an electronic funds transfer system run by NACHA, formerly called the National Automated Clearing House Association, since 1974. This payment system provides ACH transactions for use with payroll, direct deposit, tax refunds, consumer bills, tax payments, and many more payment services in the U.S. NACHA is a self-regulating institution and it gives the ACH network its management, development, and administration and rules. The organization's operating rules are designed to facilitate growth in the size and scope of electronic payments within the network. So, an automated clearinghouse or ACH is a computer-based electronic network for processing transactions, usually domestic low-value payments, between participating financial institutions. It may support the credit transfer and the direct debit. The ACH or the Automated Clearinghouse system is designed to process batches of payments containing numerous transactions and changes fees low enough to encourage its use for low-value payments. The operations of the ACH or the Automated Clearinghouse is to process the large volumes of credit and debit transactions in batches. Automated clearinghouse credit transfer are initiated by the payer and include payments such as direct deposits, payrolls, retail payments, and vendor payments. Automated clearinghouse direct debit collections are initiated by the payer with pre-authorization from the payer. ACH or Automated Clearinghouse direct debits include consumer payments such as utility bills, insurance premiums, mortgage loans, and other types of bills. There have a common examples of automated clearinghouse. The common examples of ACH transactions are a customer paying a service provider. Next is employers depositing money into their employees' checking accounts, consumer moving funds from one bank account to another, and business paying suppliers for products. These are the common examples of automated clearinghouse or ACH. But to understand how ACH payments work through the ACH network, let us use Billy. Billy was just hired by an insurance company, and on his first day of work, Billy gave his employer his bank account information. for the purpose of the direct deposit of his paycheck. In this example, the insurance company is initiating an ACH transfer or ACH payment to send money to Billy. The insurance company will send the ACH entry to its bank, which will debit the insurance company bank account and forward the entry to its ACH operator. The ACH operator will pass the entry onto Billy's bank, which, after settlement by the Fed, credits Billy's bank's account. So this ACH payment example is of an ACH or automated clearinghouse credit transactions. So additionally, Billy has given his utility company his banking information and has authorized the company to pull funds directly from his bank account for his electric bill. The utility company sends the ACH entry to its bank, which forwards the entry to its ACH operator. The ACH operator passes the entry onto Billy's bank, which debits Billy's account. After settlement by the Fed, the utility company's bank credits its bank account. This ACH or this automated clearinghouse payment is example of the automated clearinghouse debit transaction. Next is the treasury system. The treasurer requires information that is not normally available through a company's standard accounting system or even from its enterprise resources planning or ERP systems. Even though an ERP system is designed to aggregate all of the information used in a modern corporation, the treasurer also requires information from a variety of external sources regarding investments, foreign exchange positions, interest rates, and so forth. Consequently, treasury systems are needed that integrate information from a variety of sources, yielding real-time information that the treasury staff can use to efficiently perform tasks. So, treasury system is very important. In every organization has a treasurer. So ang treasurer need gid niya og kanang mga record sa ilahang mga financial, kung sa ilang financial nga in and out, because ang recording sa kanang treasurer, it is very important because diha nila makita ang ilahang cash flow, ang ilahang asset, kung naa ba sila'y assets, kung nag-high ba ang ilang asset or nag-low down. Very importante kaayo na siya. So, a treasury management system or TMS is a software application which automates the process of managing a company's financial operations. It helps companies to manage their financial activities such as cash flow, assets, and investments automatically. A treasury management system is commonly used to maintain financial security and minimize reputational risk. It can be used by a company's internal management and may be purchased from a technical supplier. That's all. Thank you.
Good morning, sir. My name is Romlimi Pihinayan and I'm reporting about treasury technology needs. So, the definition of treasurer is in the difficult position of requiring information from many sources, most of which are not required by any other company manager. Since treasury is a relatively small department that may not command the resources of larger department, it can be difficult to collect all the required information. So, ang treasurer, usa ni siya ka person na responsible sa financial management sa usa ka organization. So, in summarize, ang rule sa treasurer is general financial oversight about their fundings, their fundraising, and sa sales. Then, following list establish a reasonable set of priorities is declining order. They have three types of it. The first one are cash position. The treasurer overriding obligation is to ensure that the company has adequate cash to fund its operate. Thus, the following technology needs are critical. Mo refers ni siya sa unsa kadako na kwarta ang nagasto sa company sa ilang investment fund. So, cash book balance tracking, mo ni siya ang ledger na mo-define sa end of a given period na ang debit and credit. So, multi-bank reporting of balance information, mo ni siya ang arrangements about their consolidation sa ilang reports about sa ilang account balances o sa ilang transaction. Diri sila magsugod og consolidates. Then, the next one are cash pooling management. Mo ni siya ang magbuhat silang strategy kung saan nila pag-balance ang ilang cash management, kung saan nila pag mabalaan na sakto kayo ang balance sa ilang end of the period. So, the next one are cash forecasting and reconciliations of actual to projected cash flow. Kani siya, diri magsugod ang making a decisions about sa ilang activities such as sa ilang funding, sa ilang capital expenditure o sa ilang mga investment. So, fund transfer capability. Mo ni siya, money can be transferred through online. So, for nowadays, as millennials, ginagamit na ang GCash through sending their debit sa ilang mga liabilities aron makabayad sila. So, investment management, including money market dealing. Next was interest income calculation. Kani siya, diri na to multiply ang percentage by dividing and multiplication and makuha na to ang rating sa atong kwarta. So, debt management. Diri magsugod ang financial planning and budgeting kung saan nila pag-control ang ilang kwarta, kung saan nila pag-control og balance ang ilang profits. So, next was interest expense calculation. Mao ni siya same as interest income calculation but their difference was mugamit ra kag multiplication aron itotal ang ilang company debt aron makuha nimo ang average interest rate sa ilang company. So, next was payment processing. Payment processing diri depende kung unsa nimo pagbayad or through credit card ba. So, intercompany transaction settlement with national account. Diri makatabang ni siya dako aron mas maligayan ang mga rest sa unsaon ninyo sa pagpataas ang inyong mga profit o unsaon pagbalance ang inyong proper money. So, the next second type was foreign exchange transaction. Some companies have a little foreign business that foreign exchange transactions are negligible, but large firms with established treasury operation will likely needs to ongoing purchase and sell of multiply currency. Thus, the following technology needs. Kani siya, mo ni siyang export ang import na ang both party kay nag-agree sila aron i-delivered ang ilang kwarta, i-delivered ang product sa specific time. So, usa ni siya ka-negotiable na ang usa ka country mugbayad siya sa another country sa ilang currencies. So, the first one type are rate feed for Bloomberg or Reuters. Kani siya, diri na to gamito ng communication kung unsaon na to pag pa-understand sa atong clients or sa atong mga candidates kung unsa ang dagan sa atong mga currencies, unsa ang transactions aron mas masabtan nila ang inyong foreign exchange transaction. So, next one are intercompany netting capability. Kani siya, usa ni siya ka-arrangement kung unsaon niyo pagsabot kung saan nimo sa pagbayad sa iya, ang saan nimo pagbayad sa ako sa inyong kwarta. So next one are foreign exchange forecasting and position analysis. Kani siya, diri nato mabalan ang different prices sa goods sa usa ka country. Ug diri nato magamit ang forecasting as what I mentioned lately na ang forecasting are making a decision. So next one are foreign exchange bid summarization. Kani siya, diri nato makuan na ang dealer is willing to pay the currency. Diri siya mag-ask kung unsa ang inyong prices, kung unsa ang rating or pariha ra ba ang price na iyang ibaligya siya sa iyang country. So the next one are foreign exchange deal making capability. Kani siya usa ni siya ka trading of currency na diri including ang aspect sa buying sa inyong exchange sa inyong mga goods, so sa inyong mga currencies, o unsaon ninyo pag-determine ng inyong mga prices, kung saan kalainan. So, the last one are foreign exchange confirmation processing. Diri, processing pa man siya, so there's have a right na ang dealer mag-ask sa imo ko sa inyong mga details, sa inyong mga informations about sa inyong currencies, unsang dagan sa inyong transactions. So, let's go to number 3, hedging. For those companies that elect to hedge their interest rate of foreign exchange position, consider the following technology requirements. So, mo ni siya ang pasabot ani, mo ni siya ang mga strategies sa financial institutions, mga strategies sa inyong market, kung saan ninyo pagpabilin na mo na ang price, kung saan ninyo pagpadako o pagpaunlad sa inyong mga profits. So, number 1 was rate fed from Bloomberg or Reuters. For what I mentioned lastly, ganiha, ang rate fed kay usa ni siya ka unsa magamit yung communication and masabtan sa imong client kung saan niyo pag-exchange ang inyong transactions, kung saan niyo pag-negotiable. So, exposure modeling capability mo ni siya used to estimate the exposure. So, for example, ani mga advertisement or saan ninyo pag-deliver sa inyong client, sa inyong dealer, kung saan kumupalit ba sila o unsa ka maayo na madani nimo ang imong mga buyers. So, the last one is hedge deal making capability. So, that's all my report, sir, and thank you.
Good day, sir. I am Jimari Dagawasan. I will report the continuation of our topic, clearing and settlement system. The Treasury's technology needs also extend to the efficiency of and control of Treasury activities. Thus, the following requirements should be considered. To avoid efficiency issues, the bank should minimize data entry. The system should never require the manual entry of a transaction into the system more than once, and preferably should involve automated data collection and posting so that no manual entry is required at all. Data entry is still one of the most critical day-to-day operations for companies across the industry. Everything from customers and sales data to financial information relies heavily on data entry, meaning a single error can have a huge ramifications for your company. Even with the broad applications of operational automation, many data entry's position is still held by humans. Unfortunately, wherever a company employs people, there's the potential for human errors, and data entry errors are some of the costliest errors for companies. Unfortunately, there are many ways to avoid data input errors and put accuracy among employees. By understanding why manual data entry errors happen and learning ways to avoid them, your company can more efficiently reduce entry errors and enhance data integrity across your enterprise. Getting effective data entry software that can capture documents, automate flows, or assess mobile transactions ensures data entry does not get overlooked and forgotten. Workflow processing. If supervisory approval is required, the system should electronically route the pertinent transaction to the correct supervisor for approval. What is a workflow? A workflow is a series of tasks needed to accomplish a specific treasury-related goal. Example, to open a bank guarantee, it typically spans a number of internal and external systems and involves different types of user rules, actors, responsibility for performing the workflow task needed to accomplish the goal. Example, approval workflow. Ang approval workflow is a process na kailangan of human approvals. Maghulat og specific person na mo-approve sa data and ang mga mo-approve like ang mga direct managers, quality assurance executives or cross-department managers, and someone in finance to ensure that there is sufficient cash flow. So those are two activities that might avoid the efficiency issues of a treasury system, minimizing data entry and the workflow processing. Next is control issues. Audit trail. All treasury transactions should result in a clearly defined audit trail that identifies who made the transaction and the date, amount, and accounts impacted by the transaction. Audit trail is one managing the who, what, and when of the business transaction. It is a general principle that will manage audit trail are key indicators of good internal business ventures. Audit trail, a transition for manual to automated electronic lights that makes historical information more accurate, readily accessible, and usable. Like for example, the information technology departments. May sila mag-monitor like mabalaan nila kung saan pag-prevent sa misuse, hacking, or corruption of information. So by audit trail, matrace kung kinsel nagtransact, nagpagawas or nagpasulod og kwarta. Next is segregation of duties. The system should limit access to certain modules and require approval of key transactions. Segregation of duties are important so that you will make your work easier and you will avoid the fraud and errors of the transaction. And last indicators to avoid the control issues is having a warning indicators. The system should automatically modify users if transactions confirmation have not been received, if hedging policies are being violated, if there are negative cash balances, and so on. This is important so that a customer will be informed and take an actions to deal with it. In conclusion for my report, to avoid the efficiency issues and control issues, the Treasury system must implement these ways to avoid data entry issues, fraud, and errors, and to make the institution more productive. That's all. Thank you.
Hey, sir. I'm Christine A. Gumamo and tackle about the last part of treasury system, um, treasury management, and key benefits of treasury management. So first, treasury management. System involve the creation and governance of various procedures and policies designed to help companies better manage their cash flow and all the aspects that go with it, such as payables, receivables, interest rates, and foreign exchange rates. Treasury management services were built to help companies improve processing of cash flows, manage funds better, and enhance banking visibility. Uh, the treasury management, managing cash, well, is crucial for businesses of all sizes. Even the most profitable of businesses can fail if there is insufficient cash on hand to cover bills and other financial obligations. Through treasury management, companies are better equipped to monitor the amount and timing of cash inflows and outflows. It is also the role of treasury management to extend the time needed for a company to retain the money needed bills and to reduce the time it takes to receive money from customers. And there are some categories of treasury management. Uh, the liquidity management. So, liquidity management is important because it helps to ensure businesses have cash flow when they need it, and any excess can be stored in interest bearing accounts. Next is fraud management. Fraud management or fraud solutions are offered to mitigate potential risk before any permanent damage is incurred. Next is receivables management. Receivables management, collecting and processing. So, receivables is one of the most important activities for any business. Receivable management aims to streamline receivables and accelerate processing times. Next is information management. Uh, this is effective decision making requires having the right data on hand when needed. It's also crucial to have an accurate view of the company's financial position. And lastly is payables or disbursement management. Businesses must also distribute funds, but it should be done both quickly and efficiently. Next is the key benefits of treasury management. Treasury management services provide businesses with a number of unique benefits. One of the biggest benefits is time efficiency. Uh, so, when you say time efficiency, it is offers a way to take control of our daily routine and start to use our time or our advantage. When we're efficient, we're not wasting our precious hours. Instead, we're understanding how to make ourselves the most productive in the shortest amount of time. Uh, Treasury management's one of the biggest benefits is time efficiency. So, by implementing a treasury management system, businesses are able to streamline the payment process and reduce the time spent on payment, authorization, and initiation. In addition, treasury management allows to for certain cost savings with access to various tools and resources. Businesses can immediately detect the cost of cross-bank transactions and take better control of other related fees. Having more control over these processes also takes some of the guesswork out of financial planning, which reduces the likelihood of costly errors. There are seven core benefits of Treasury Department. First is boost in productivity. So, a treasury management system excels in streamlining and automating manual processes and tedious data management tasks, consequently boosting your overall daily productivity. Automated authorization and payment initiation eliminates organizational bottlenecks and allows for less location dependence. Next is real-time and precise data availability. With a TMS, treasurers access and view financial data and take advantage of integrated reporting tools that extract real-time to make informed decisions. The key benefit with instant data availability and reporting is that treasurers can optimize their short-term cash management and view historic cash flows. Next is a reduction in manual entry and calculation errors. With the TMS, users establish digital automation workflows for data entry and data verification. This ensures manual errors can be caught early. Next is limit redundant banking and FX cost. TMS quantifiable benefits can be found with the consolidation of payment systems and banking relationships, leading to a reduction in cross-bank and FX cost. Tools like multilateral netting and flexible bank account integrations are available to accomplish those goals. Next is detailed activity monitoring. Transparency of users' activity within a treasury management system allows central treasury departments to paint A to Z panoramas of any data alteration of payment trail. Whether you believe in 4 eyes or 6 eyes principle for authorization workflows, you can generate intuitive audit trails within the system from a pool of all activities for all users. Additionally, activity trails can be extended to communication with banks and beneficiaries if needed. Next is bank and connectivity flexibility. The value the value proposition of TMS is typically seen in the bridge to multiple banks and accounts. One central interface allows corporates to take advantage of the various emerging connectivity options and switch providers without creating stalls in productivity. The separation from legacy bank interfaces allows treasurers full control of their cash and activity. And the last one is regulatory compliance and risk mitigation. Regulatory compliance and risk mitigation establish company-wide compliance with industry regulations within the systems and take advantage of integrated risk mitigation functionality. So that's all. Thank you.